The Dow just 13 points away at one point from 20K yesterday. So everyone wants to know, when is the day that we reach that milestone? It could be today. Let's go to Chris Beauchamp. He's a chief market analyst at IG Group in London. He's joining us right now on the phone. Good morning, Chris.
Good morning.
Are you as excited there as we are here about this possibility of Dow 20,000 coming potentially 19 sessions after 19,000?
Yeah, I think that it's lining up quite nicely. I think everyone loves a good round number, and everyone gets sort of fixated on it. It doesn't mean anything really, anything more than it does. Yeah, exactly. But the markets, it's strange how often, we've seen it with the FTSE in 7,000, we've been here so often before that it is odd how those round numbers do exert a certain fixation for investors. Now, I think it's a sign of the health of the US economy, it's a sign of the health of the US stock market, that things are going in the right direction. So clearly it's no bad thing that we should be cheering a rising market. But clearly I think it's probably just a bit of a totemic number, but we'd all like to see it, I think, before Christmas.
Look, everybody likes to see a winning market, right? Nobody wants to see 6,500 like in 2009 when we were in bear market territory and we're up 200% from those levels. So assuming we hit that 20,000 mark today, tomorrow, sometime by the end of 2016, what happens? Do we continue that momentum or do we lose some ground?
That's a huge question, I think, and I think you take a cue from what we had from FedEx last night and that miss on earnings. Now, the stronger dollar playing a part. You've had a massive rise in the US dollar over the last couple of months, and that's the big question for US firms. How is that going to affect them going into 2017? Will the earnings season starting in January reflect the impact of that stronger dollar? Will that mean that we get a bit of a move lower in these markets? But as you point out, the Dow was at its 2009 lows, and then it's tripled in that time or whatever. So it's still a very healthy bull market, so we should probably welcome a short-term correction because we can get aboard this rally and pick up some more stock.
How would you describe the rally that you're seeing? Is it a relief rally? Is it a hated rally? Is it what type of rally? There's a lot of energy, it feels, behind it.
Yeah, I think it was the most hated rally, but it's interesting that you've seen such big inflows into US equity funds, both mutual funds and ETFs the last few weeks. People really are getting back into the market. I think there's a sort of expectation that the new administration will deliver a kind of stimulus program and that people are very happy with this. Perhaps we're moving on now from what people perceived as the Fed-manipulated rally or the Fed-encouraged rally to be over the past sort of 5 or 6 years. So it could be a very good year for the US market.
And this certainly puts pressure on Donald Trump to follow through with a lot of his promises. Chris Beauchamp, Chief Market Analyst at IG Group, thank you so much for your time this morning.